I did mention to you that in QuickBooks you have fixed asset and what they call other current. And basically what that is a fixed asset is something you plan to keep long term. I'm going to keep the building, I might keep the vehicles for a while, versus something like inventory that's more liquid, and that's what they call an other current asset in QuickBooks. Now, remember that when you set up the asset accounts, you don't want to an asset account for every single thing the business owns, but you want more like big buckets. So vehicles, for example, is a common one that I see. I'll also see frequently furniture and fixtures. If the business has a lot of equipment they work with, then they'll have one called equipment. Typically you'll see 6 or 10 of those. And this is where the accountant, like I said, is going to be helpful. He or she is going to help you determine what numbers to plug in there. So let's move on down the list. I want to talk to you real quick about the accounts payable that you see here, and another one that you don't see but you will once you start invoicing is called accounts receivable. Basically, your payables are any bills that you've entered that you have not yet paid. So automatically when you start entering the bills, you will see a number appear in this balance total, and then when you pay them, the number goes down. And the accounts receivable, which is the flip side of that, would be any invoices you've created that haven't yet been paid. Now, some other ones that you don't see here, you don't see credit cards, for example. So when we talk about credit cards, we're talking about credit cards your business uses to purchase items for the business. Now, let me just throw this out there. What I see happen often is when people get their Visa statement in the mail, they'll enter it as a bill in QuickBooks, and that is not the correct way to do things. A statement is not a bill. A statement is there for you to determine that you and the bank match. It's just like your bank statement when you get it. You should reconcile your credit card statements as well as your bank statements. So what happens is when you have a credit card account set up, you're actually going to have an icon on your home screen for that. Now let me just go to the home screen for a second and show you something. I want you to notice that right here there's nothing right now. And that's because we don't have a credit card account set up. I'm going to set one up real quick and then show you how you have an icon there. So I'm going back to the chart of accounts. I'm going to get into account new. Notice credit card is one of your choices. And I'm going to call this one Visa. Now you do want one for every credit card that the business has. And if they're both Visas, you might call one Capital One and you might call one your bank name. You might call them Visa and have the last couple digits at the end, whatever you like to call them. You can have a description as we talked about earlier, and I would not put my credit card number in here unless there was some reason you were using an ancillary product that needed it. But you will need an opening balance. And this is, as of your start date, how much money did you owe on the Visa card? I'm going to say $2,500 as of my start date, and I'll click OK. And now I'm going to hit Save and Close at the bottom. And I know this is past 90 days, that's okay. And here's what I want you to notice. Now you can see the balance on that Visa card. Now, whenever you make a payment towards the Visa card, make sure you put it to this account, always, because you want that balance to always reflect the accurate balance that you owe. Now, if I went back to my home screen for a moment, you would now notice there is an enter credit card charge option. So the correct way to work with your credit cards is enter each charge separately right here. Then when you get that statement, you're going to reconcile it. And you'll see how to do that later on when we get to the credit card portion. But at least have the account set up so you can put your items in there. Okay, back to our chart of accounts. Now let's talk about your liabilities for a moment. A liability is something you owe. Now we have loans that we take out, we obviously owe those. We also have payroll, and when we do payroll, we actually withhold taxes, so we owe those. Sales tax is another good example. If you collect sales tax, then you have to pay it, so those are all considered liabilities. Now in accounting, there are short-term and long-term. A short-term liability is something you're going to pay off at 12 or 13 months. A long-term liability is the 5-year car note, the 30-year mortgage. Now in QuickBooks they're called long-term or other current. So you can see the payroll one is here automatically because we had decided that we turned on the payroll option. So once we start withholding taxes, you'll see there will be a balance in that particular account. Any loans you have, you would need to set those up. So let me go ahead and set one up for you. And let's say that this is a car loan. So I'm going to go down to Account, New, and here's something I wanted to point out. This is a little misleading. Notice loan is an option right here. If you pick this, it will assume a short term. So if you're looking for the long-term loan option, it's going to be right down here where it says other account types. And there you can choose the long-term liability. Then you can click continue. Now here's where you put in the account name, and I'm going to put auto loan for now. And I'm going to enter an opening balance. Now remember, the opening balance is as of your start date, how much did you owe on that particular loan? I'm going to say $19,000 as of my start date. And I'm going to click OK, and then I'll save and close so you can see what this looks like. And there you go. You can see that on the auto loan I owe $19,000. So when you make a payment to pay the loan, you're going to put the principal amount back to this loan. Okay, let's go on down the list. Equity. Equity means equal, if you think about that word. So a good example of this is if you own the company and you take a little bit of money out of the company and put it into your personal, that's considered an owner draw when you take money out of the business. If you're the owner and you put money into the business, that's considered an owner contribution. Now get with your accountant on whether you need to pay yourself payroll and how much and those sort of things, because there are some guidelines on that. What you don't want to do is be just taking a lot of money out of the business and not paying taxes on that. So a good rule of thumb is keep your draws less than your contributions. And that way it looks like you're always putting more in than taking them out. Alright, the next account are your income accounts. So this is when you make a sale for the business, the money goes into this income account. Now you can have just the one like you see here, or you may have multiple. Don't set up too many of them though, but if you need a way of segmenting the different sales within your business, you can have as many as you need. Cost of goods. If you make products in your business and you have to buy a product or a supply to make that particular product or supply happen, then use the cost of goods sold account. Now the expenses, this is the largest portion. Expenses are when I spend money, what did I spend the money for? So you'll see you have things like advertising already created, you've got automobile, you've got service charges, interest, and there's quite a few you're going to add. So what I want to talk about now real quick is how do you add sub-accounts? So automobile is a great example. If I wanted to track the amount of fuel that I spent, I have to have an account for that. Or if I want to track my repairs and maintenance, I need an account. So let's add one for fuel. We're going to go down to Account, New, and your sub-account has to be the same type as the main account. So this will be an expense. I'll go ahead and give it a number, and I'm going to call it fuel. And here's where you're going to check sub-account of, and I'm going to pick automobile. And that's how you create a sub-account. I'm going to click Save and Close, and now you'll notice it looks like it's indented underneath the main account. So now I have a way of separating my fuel from all my generic automobile expenses. So you can see there'll be quite a few you probably want to add. For example, under insurance, your company might have different types of insurance, liability, different types. You could actually put those as sub-accounts under insurance. It could be that under, for example, professional fees, I typically see the accountant set up as one and any attorney set up as another. Or utilities. Typically you're going to have gas and electric separated from your telephone. So you can set this up any way you like. Now notice the Ask My Accountant. If there's anything you enter in QuickBooks and you don't know what account to put it to, stick it in here until you figure out what to do with it. Just make sure that you frequently go in and clean that up and put it where the account actually goes. Now the last thing I want you to notice here is this. The accounts from equity up actually have a balance or a register. So I can double click on any of these, let's say Visa, and I'm now in that particular register. I can actually close it with the X at the top. Now make sure you don't get the top X, you want the one right below it there, and that'll take you back to your chart of accounts. Any of these accounts below that, you're not going to see a balance because they pretty much run a negative, their expenses. So you would actually get a report if you double clicked on any of those. So that gives you a quick overview of this chart of accounts. We will be referring back to it from time to time, so I just wanted you to get familiar with it and kind of know where it is and how it works. So what we're going to do now is go ahead and look at one more thing in this module. I want to show you how to find different items in QuickBooks, and then we'll be wrapping it up and working with customers in Module 4.